So I've received a lot of questions lately, rightfully so, since Tesla has, fallen over 40, at one point it was 48% from all-time highs. Can Tesla still achieve my lofty expectations for 2025? Could Tesla be a $900 stock by the end of this year? And the short answer is yes. And I will explain kind of what we need to see happen for those kind of prices for Tesla. Now, I will admit things have changed for the worst since the start of this year. My expectations for the administration and what was ultimately going to happen has definitely changed. And that changes things a bit for Tesla as well. For an example, I didn't expect, even with Doge, that we were going to see, the chainsaw taken to bureaucracy, as Elon has put it. I think that's ultimately what probably needs to happen, but I didn't expect that it was going to happen all at once or this quickly. I also did not expect that we were going to get so much drama with tariffs. Now, I think the Doge issue, the whole, reduce government layoffs, is not really a huge problem for markets by itself, okay? But with tariffs, I think that creates a lot of business side uncertainty. Okay, it's like Doge with government layoffs creates uncertainty with, the 2 million government employees that are out there. People are hesitant to spend, and they're wanting to save more money because they don't know if they're going to have a job. Okay. And I think that kind of translates into broader confidence issues with citizens, okay, with average working people. The tariff dilemma creates massive uncertainty with business, okay? If you are a business leader right now, the last thing you want to do is go hire people, for an example, or commit to investing a certain project or growing your business to a certain degree, because on one front, you don't know what the tariff landscape is going to look like, how that's ultimately going to end. You don't even know if the tax credits are going to be implemented or passed. Okay, a lot of the things out of Washington right now sound really good from a business perspective, but you need Congress approval. Okay, like making all capital investments expensible on your taxes. That would be a big positive for business investment if that happened. Is that going to pass Congress? We're not going to know for a while. Okay, so mix the tariff uncertainty and really the confidence issues that is causing with employers, and employers are pulling back the amount of hiring they're doing. Mix that with all the government layoffs that are very televised by mainstream media, making uncertainty in the consumer sector, and you have a pretty ugly kind of set of catalyst here for the economy. And that is something I did not anticipate. I did not anticipate this much volatility with tariffs. We anticipated tariffs. Again, don't get me wrong, that's fine. But it's the volatility of it. 1 month, there's tariffs. The next month, there's a 1 month delay. The next month, it's tariffs on everything, right? Or next week, it's tariffs on everything. And then it's tariffs only on certain things and exemptions here, when 2 weeks ago, it was said there was going to be no exemptions. Okay. If you've been following the markets, you kind of know what I'm saying here. Now, does any of this really affect Tesla? No, it doesn't. But it affects the bell curve of outcomes in markets. Okay. I'm gonna do a much more like professional bell curve analysis over this weekend, so stay tuned to the channel for that one. I did one that took about 5 minutes. Okay, this is a bell curve. Okay, the tails are really what moves markets, okay? So in the middle here is the most expected kind of outcome for markets this year. Around 2% GDP growth, 10 to 15% EPS growth, no recession, just kind of business as usual, okay? Starting to get to the left side of the bell curve, you have 1% GDP, 8% EPS growth. You know, is that terrible? Not really. Okay, that's not recession. I don't think you need to see a bear market if you have an economy like this. Okay, so that would be okay, but it would definitely still put a hamper on things. Now, in this set side of the curve right here, where it's not priced in, it's not the average expectation, but it's not terrible. Okay, it's not recession. I think Tesla is priced for that. Okay, so I think with the stock down almost 50%, this kind of environment, Tesla can do very well. Now, on the far side of the bell curve here, the tail, you have a recession, flat EPS growth. That is not priced by markets. And then on the, even further to the left, you have a moderate recession, something like, 08, something like that. Okay. Recession here, I just mean like a shallow technical recession, not the end of, necessarily the expansion cycle. Moderate recession, that's a bigger problem. And then on the far, far side, you have a depression. Now, obviously, this is in the, this is probabilities, okay? Depression, very low probability. Moderate recession, low probability, but not as low as depression. Recession, low probability, but not out of the realm of possibilities. 1% GDP, right? That could logically happen. Okay. Now, on the far right side of the bell curve of positive potential outcomes, you have 2.5% GDP, 15% EPS growth. That's not priced in. That's not the average consensus estimate, but it's not too far-fetched either. Even further on the right end of the bell curve, you have 3% GDP, 2% inflation by mid-year, and 18% EPS growth. That would be a really good outcome. And I would expect Tesla and really the markets broadly to do very well under either one of these, far right bell curve outcomes. Now, in the far right, which is unlikely, you have AI productivity boom, 4% GDP, 1.8% CPI, many Fed cuts, 18% EPS growth, like the opposite of a depression. Okay, what I fear could start to happen in markets, as Scott Bessent said, we're kind of in this detox period from government spending, is you could see the bell curve start to shift, okay? Where the left side of the bell curve starts to become more in the middle, right? And you kind of shift everything to the right. It feels like that is starting to happen with the 8% decline in markets, and especially in momentum stocks. Now, we'll get back to that in just a moment, but we did have a jobs report today that came in slightly below estimates. We were expecting about 165,000 job ads today from the BLS survey. It came in at 151,000. So a slight miss, but it's really the household survey that came in at negative 588,000 jobs. Now, you may have heard of the household survey before and some scary numbers that are associated with that, but this tops almost every reading we have gotten in the past, couple of years. This chart here alone goes back to 2021. And you had 588,000 negative, job reports. That's not good. The only time you were worse than this was December of 2023. Or I think it's technically January of 2023. That's not good. It's not good at all. And, even Treasury Secretary Scott Bessent, again, said today, the economy could be starting to roll a little bit. That's a very soft way to say we could be entering into a downturn soon. Now, again, it's uncertain. We don't know how much government spending is really propping up the economy. What if that, it's a huge drag on the economy? What if it's not something that is small, but mix tariffs together with confidence issues and, what we're seeing right now leads to something that could look more like a recession? That's a probability and a possibility. And unfortunately, I think Tesla has priced in some of that recession risk. Now, what's fascinating is here I have the MTUM ETF. This is a momentum ETF, so tracks momentum stocks. Well, this thing peaked out before in 2021 in November, the first, second week of November. The S&P didn't peak out then, okay? The S&P peaked out in it was specifically on January 4th, 2022. It was 2 months later that the S&P actually peaked. So momentum stocks rolling over now could be a bigger problem, you know, if 2022 plays out again. Because first, it's the momentum stocks that really go. And momentum stocks really started to falter a bit, you know, in like July of 2021. And then you had a little bit of a rally right in October. And then, yeah, the rest is history. You've seen that momentum roll over now. And what it is essentially Wall Street saying, if we go into a recession, I don't want to hold these stocks. That's Tesla, that's AppLovin, that's Carvana, that's, you know, all of the other momentum names you can think of, right? That because if we go into a recession, those are the last names that you want to own. So you've already seen some of this recession risk getting priced into some areas of markets. You've seen the outperformance of staples, the underperformance of consumer discretionary, right? That is kind of a little bit of that recession trade. You've also seen TLT, although it is down today and has been down the last couple of days. It has rallied since the start of this year from $84 up to the high. It was like almost $92, a huge rally. Again, part of that recession trade. Now, the S&P only down 7-8% from all-time highs makes me a little nervous, because if the economic data does get worse, as Fed officials and government officials have suggested, it's going to take some time for essentially the economy to bottom, for the detox of the government spending, for the government layoffs to be reflected in jobs reports. It's going to take some time. Have we priced in enough of that recession risk already? It's a hard bargain for me on the SPY. I don't personally think so, but who knows? Tesla, probably. The stock's down, you know, almost 50% from all-time highs. I think you've priced in that recession risk already. And I think that is still a process. Okay. So if we're surprised, you know, to the upside, if the trade war were to end over this weekend, let's say, oh yeah, that's money, because confidence will return and we have a higher chance of avoiding a recession. If the tariff drama gets worse, as we are expecting it will, with reciprocal tariffs on April 2nd, it's going to become a lot harder to avoid a larger slowdown. So while I can't sit here definitively say, you know, we're going to have a certain outcome this year, I can give you a roadmap. Tariffs and confidence. Recessions are confidence issues. We've already seen, again, the market starting to price in recession risk. A lot of it's because of tariffs and confidence issues. Okay, tariffs, people think are inflationary. They're actually negative on the economy, because for an example, if you're a company and you're importing things from China, if China makes your product and you're bringing them here, for an example, well, you now have to pay a tax on that. If you cannot move production or raise prices, you have to likely begin firing people you don't need. And there's a lot of excess employment out there, right? Amazon, for an example, and a lot of companies overhired just because they would rather have the employees than not have them. Okay. And again, from a tariff perspective, there's a lot of uncertainty there. You know, how companies are going to invest, so on and so forth. So I'm hard pressed to say this is the low for the markets, But I also see things as very much skewed in a positive direction for Tesla. Even with, the economy starting to slow down, I think Tesla's priced in a lot of that. Now, if we did have a recession, ultimately, Tesla stock could still fall. This is not the first time Tesla has fallen a lot. Back in, from all-time highs in 2021, Tesla stock ended up falling about 75%. You're down almost 50% today. If you were to fall 75% again, and that's the last example we have of the markets actually pricing in a recession, that would put Tesla at about 120 again. That's like, that's a really bad situation, clearly. But, do recession odds get to 100%? Do we have a recession? That's very much an unknown. And all of this could change in a minute, in a second, right? If Trump were to back off of the trade war and just do the tariff, leave them, and don't negotiate. That's what you want to see if you're an investor right now, is do the tariffs, stop going back and forth, leave it at the set amount, let businesses adjust and get on with their lives. Okay? If that happens, we have a much rosier outlook for this year. The longer it takes, again, the worse off things will be. And you're starting to see a lot of those cracks. Again, every single economic data set we have gotten has been bad. Challenger job cuts came in at like scary numbers you only see during like peaks of recessions. Not good. Okay, not good at all. Like, these are not numbers that you want to see, and this is only the start. So from that perspective, as long as we avoid a recession, I think Tesla will do well this year. And even if we did have some recession fears that come about over the next couple of months, I think Tesla could still end the year in a pretty good place. A double from here wouldn't be too crazy, in my opinion. Is Tesla going to hit $900 per share this year, as I previously expected, if we have a recession? No. Unless there's some kind of crazy, advancement in full self-driving or Optimus that we haven't priced in yet. Okay. Could Tesla end the year at 600 plus? If we do have an economy that avoids a recession, the second half of this year looks good, sure. That could definitely be in the cards. $600-700, I wouldn't be shocked if we hit those levels. The problem is I don't know what's going to happen with this administration. I don't know how far or how much they want to weaken the economy. That's what they're trying to do right now. They're trying to weaken the economy to bring down 10-year treasury yields and reset inflation. That's what they're doing. If you don't see that now, then you haven't been paying attention. Okay? They're trying to weaken the economy now in order for better growth in the future. It's hard to know how much pain they're willing to tolerate. So that's what's very uncertain about right now. But I can say I feel confident in buying Tesla at these levels. I have been buying Tesla at these levels. And I think the risk reward looks really good for Tesla. Now, short term, I think Tesla's going to bounce. I think Tesla probably bounces back to about 281, potentially gets back to about $300. Markets are due for a bounce. Tesla's well due for a bounce. And I think that will come in the shorter term. Unless, again, something changes and there's a new, crisis, right? Is it the low, though? I don't know. I do know if we are a $600-700 stock by the end of this year, most people are going to kick themselves for not buying Tesla at these levels. So the way I'm really going about Tesla right now, and I think this is the best thing that I can end this video with, what I'm doing right now is I'm taking, whether it's $20,000, let's call it, that I want to put into Tesla, I want to allocate to Tesla for the future, long term. We're not talking short term, day by day trading, long term. When you're hitting these lows, I'm going out, I'm buying 5 shares. I'm going out, I'm buying 10 shares. So I can have some cash ready in case we did ultimately plunge to like 150, even if we fall down to 200, right? I want to have cash available, but I want to be steadily buying on this downtrend because it could all change. And when it changes, Tesla's not going to be a $260 stock anymore. More like a $400 stock again. As we get clarity on the economy, as you know, maybe the tariffs drama winds down, you know, things will go back to normal. And it's one of those classic examples of what I've talked about for years now here on this channel. The markets can handle bad news. We cannot handle uncertainty. It's like ordering a pizza, right? If they tell you it's going to be an hour for your pizza, great, awesome. You're fine with that because you already know what to expect. If that pizza comes in 40 minutes, you're going to be pretty happy about that because it came faster than expected. Versus you order your pizza, you have no idea when it's going to be there, and it takes an hour. You might be a little pissed off, right? Versus if you'd known, you would have been okay with that. It's actually a trick on your psychology. That's why I like Domino's, and basically anything you do lets you know where your item or product is in the transport of it or production of it, right? Whether it's pizza, it's Amazon, it's, you know, Walmart or Uber or plane rides or buses. It doesn't matter what it is. It's your psychology. You will have a bad experience if you undergo too much uncertainty. Right? We can handle bad news though, just not uncertainty. It's a very human thing. It's probably the most human thing about the markets is you know, the uncertainty that the markets do not like and how the markets react to that. And right now, it's all uncertainty. If that uncertainty does fade a bit, if we get more clarity, even if it's bad news, Tesla's not going to be a $260 stock anymore. Going to be on its way to 400 again. And again, I think the fundamentals of Tesla, nothing has changed. Things have only gotten better for Tesla, and that's why I really haven't focused on that too much here in this video. Robotaxi, that's only gotten better. Optimus, we haven't really got an update for Optimus, come to think about it, but I assume that's still on the same trajectory it was on before. We got announced a new Megapack factory, the new Model Y has came out. It looks like we're going to get refreshed Model S this year, Model X this year. Doesn't really matter. Cheaper, lower price Tesla is still on track. Tesla's launching in India. They launched FSD in China and in Mexico. Like, everything's been going right for Tesla. Deliveries have slowed down a little bit in Europe because of the transition to the new Model Y. That's going to be resolved in the coming weeks. And I do think we're going to get much more of a positive news flow going ahead. So from a company specific level on Tesla, you know, whether we're a $900 stock or, you know, a $400 stock or $600 stock by the end of this year, I think really has to do more so with the administration, more so with what happens with the economy, more than Tesla. Because I think Tesla's gonna continue to succeed and follow through with their guidance and their roadmap that they previously put out. And that's what's difficult here. If Tesla's having issues, I can confidently tell you, like, yeah, this is really bad, or, you know, this is really good. And we've gotten a lot of good news. It's not being reflected because of the overall uncertainty about the economy, about, again, inflation, all of that. So preferably inflation comes down, preferably the economy holds up, preferably government spending isn't such a huge factor that pushes us into a recession. Again, confidence is still an issue. We need some clarity on tariffs to get really business investment flowing again, to get companies that are confident to hire people again. And I don't know how these things are going to play out or what the timeline is going to look like. But what I know is the administration is trying to do this. They're trying to weaken the economy, to reset the economy, short-term pain for long-term gains. So if you're long-term focused, nothing to worry about. If you're trying to go all in at a certain price or trade this or trade that, you're going to get smoked in this environment. Like, this is not the battle for you to fight. Okay? You short on big bounces, you go long on big crashes. I think it's going to be a lot of volatility back and forth, back and forth, back and forth. So let me know what you guys think down below in the comment section. I don't think anything's off the table here. I don't think anything has changed negative for Tesla. It's just we have no idea how policy is going to turn out. or what effect that'll have on inflation or the economy. We just have no idea. And that's the biggest negative driving factor, I think, on Tesla right now. I think everyone kind of knows the Model Y has been slow because of the new factory. I think it's really the momentum implosion that we have seen with momentum stocks that have caused this, big drag on markets. And, who knows when that flips and when people get more confident and people start getting jobs again, real jobs again. I think the household survey is much more accurate than the government survey. So yeah, people are struggling. They're not spending as much. We've seen that with retailers. Overall, I'm even uncertain. And I try to be as certain as possible. I try to weed through the BS, but I feel like there's so much BS right now. I mean, you're getting dirty no matter where you look or where you go. So that is going to do it for this video, ladies and gentlemen. I am very bullish and optimistic on this year from a Tesla business perspective. Economic perspective, it's hard. Again, once things clear up and we get some certainty, then it'll be much easier to say with a definitive what happens to Tesla this year. But I wouldn't be worried about the Tesla business if I were you. And as Warren Buffett has said before, price is what you pay for a stock, value is what you get. If the price is falling and the value is rising, that means you are getting a better deal on Tesla. And that is what is happening right now. The price is falling, the value is rising with all of the new things that Tesla is doing that I shared with you just a few moments ago. So let me know what you guys think down below in the comment section. If I am correct, though, Tesla ends this year at, let's call it $600 per share, which is not exactly like my for sure target. That would be a 128% gain or so from here. If the stock could end at 700, that's 165% gain from here. And if the stock were to end the year at $900, which I think you'd have to see a lot go right at this point for that to happen, would be a 240% gain from here. That would be pretty awesome. Let me know again what you guys are doing with your portfolios down below in the comment section. Have a great rest of your day, and I will see you in the next one.